month, and doors opens at 5:30. The event actually begins at 6, and every time we do it, we feature some kind of fantastic technical wizard of some variety who enlightens us with their knowledge, especially if you're me, because I generally have no idea what's happening. So Mainstream Technology is our fantastic sponsor for this, and in just a minute, I'm going to have Johnny Burgess come up and say a couple quick things. But before I do that, I want to tell you guys about some stuff that we have coming up. On August 21st through August 23rd, so that whole weekend, we're going to do a startup event called 2 Days to Startup. It's going to be an entire weekend of taking ideas and potentially turning them into real businesses. Now, you don't have to show up with an idea. You can come in and work on somebody else's idea. We're going to have some corporate problems that are actively looking for solutions and would be potentially willing to pay for those solutions. And we have the opportunity to work with some research from UALR and potentially UAMS to, again, take research and turn it into something that is commercial and not just an idea sitting in a lab forever and ever. So that is August 21st, and you can find out more on our website, which is venturecenter.co, and that's going to be /2 days because it's 2 days to start up. The other thing that you guys are the perfect people to know about is our Jolt Hackathon. You're going to see a logo come up here. It'll definitely catch your eye. Jolt is a 24-hour event. It's going to be a security hackathon, and we are actively looking for some people to help us kind of hone the code that we have in place and potentially write some additional code for us. The idea is that the game will function like a Jeopardy board, and groups are going to compete against each other to crack through each individual level. There are going to be some rockin' prizes, some wicked cool stuff, and we think that since you guys are all tech people, if any of you would like to volunteer to help with that, that would be great. In fact, if all of you would like to volunteer, that would be better. Yes. Right.
So we're taking this model from, I think, UC's
Mm-hmm.
and so we're going to be building out puzzles. The team will have to break in and grab from the text file a key. And when they enter the key to the dashboard software, they win. Whoever wins web app 400, whoever wins that first, gets to call the next puzzle that they want.
Right. So even if you don't want to help me code it, do you think that might be something you'd want to come and participate in? Yes. I can see you all saying yes. You're just not saying yes yet because you haven't heard enough. Yeah. Really, you'll be all set. You know, we'll feed you, we'll house you, we'll do everything. We might even sort of clothe you, because there will be some shirts too. So anyhow, so just keep an eye out for that. And again, please come see me if you have any interest at all in being on our planning committee for Jolt, which is
building a puzzle doesn't necessarily mean that you can compete.
right. Right. No cheating. So if you want to compete, then you can't help me build it. But what you could do is help conceptualize some of the topics that we're building puzzles for, because we need as much input on that as we can get. Okay, so with that, Johnny Burgess.
Thank you, Jessica. For a second there, I thought that when you were talking about the Jolt Hackathon, that you had found a case of Jolt Cola, which used to be the official highly carbonated or highly caffeinated beverage that you used when you were hacking. That's from back in the 90s. It's probably still good. Welcome to another installment of Code It. Mainstream, we are tickled to death and to be a part of this. And Lee and I were talking before when we got here about that we're already a year into Code It, that we've been doing this programming for a year, and it's really taken off, Lee. It's as is a lot of stuff. You're starting to notice an increasing drumbeat of activity coming from the Venture Center, which is a great thing for the startup community here, a great thing for the technology community, and we at Mainstream are just tickled to death to be part of this. Our speaker tonight, Randy Bear, has been enabling people with new technology for quite some time now. Picture, if you will, a much younger version of me, a high school senior working at Dillard Department Stores, and a man walks into my office, or the little room that I use to work in, and introduced himself, and turns out that he had attended the same high school that I was going to, and the senior English teacher had told him to come introduce himself to me because she knew that I was working up there after school. And the enabling of the technology part was Randy introduced me to the word processor on the Dillard mainframe. And I was able to use one of the 100 largest computers in the country to write my senior thesis. Randy's been helping people with technology for a long time. A veteran of Dillard Department Stores back in the 80s. Spent several years at USAA as an IT architect, where he got into the money management, the money flow, and the way to do it securely. He actually is named on several patents in that area. And tonight he's going to be speaking to us on innovation and beyond mobile money movement, how to do it securely, as part of his current gig with ABC Financial. So without further ado, Randy Bear.
Thanks, John. Appreciate it. Whoa. Okay.
Can I say one thing real quick?
Go ahead, please.
Sorry. We have some snacks back there that I would appreciate if you guys would eat. The end.
Okay. There we go. Snacks. That's the important thing. No, this is interesting. And we're going to try and see how this works. God, perfect. Okay. Now we're good. Even though I do technology, I don't do technology real well here. So this is really good. This is actually a full circle for me. As John said, I started here, and I was a native of Arkansas, grew up in Bryant community, and went to ALR. Just a little background, went to, as John said, was at Dillard Department Stores. It was cool to see John there, and then see John as he's progressed through a lot of things with mainstream technologies. I went to USAA. Believe it or not, the reason why I ended up at USAA was at Dillard's, this is in the days when all the mainframes together, and they said, well, we can't do this. We're going to do disaster recovery. So we built a data center at the Otter Creek Center. I was responsible for moving that out there. USAA was getting ready to do that. And they said, we'd like to have you come work. Little did I realize it was going to create the journey that I had there at USAA. The primary space that I really had the most fun in was the money movement space at USAA. And if you can think about this, USAA is, and we'll talk a little bit more, you'll see a little bit more about that in a second, but USAA is responsible for, as you probably several of you know, it's with the military community. It was founded there, started there. We took care of our members' money. And as I was telling Richard earlier, I said, when we first started the money movement journey, I set the team down in a conference room, and I said, okay, we're about to do some really cool things with money movement. But before we do it, I'm going to let you know we're not going to drop one penny of a member's money on the floor. Everything is going to go through, because when you screw up someone's money, they remember. And that was the biggest thing with USA, was establishing trust. Left there, I worked in applied research, worked at Part Level Systems, a startup. In a similar thing to this, they are in Geekdom, which is in San Antonio. That's Graham Weston's. He started that there, right on Weston in Rackspace. It's very similar to the Venture Center. In fact, I found a home here. It was like I left the Geekdom and I came to the Venture Center, and it's been fun ever since. And now I'm working at ABC Financial. Work on the Enterprise API team. Several of my coworkers are here supporting me, and I thank y'all so much for that. So, but let's get started. So the first thing I want to talk about is, I want to talk about innovation. And this was something that is actually everybody, I think, when I mention this and I bring it up, they say, oh yeah, this is something that's helped me so much. And it was a thing that one of the innovations we did at USAA is called Deposit Mobile. How many of y'all have a smartphone, and how many of you have deposited a check with a smartphone before? Windows? That's true. That actually, we started that in USAA. We were the inventors of that. I was not on that patent. I was one of the team. What USAA did, we did a lot of defensive patents. That's my 6 are defensive patents. But this one here, we said, this is what we go forward. And you'll see the reason why. The reason why is USAA only has one bank. If you look at what they have one bank, they have millions of depositors around the country. So our biggest problem we had, I keep saying we, I keep falling back to them. They're the largest single issuer of MasterCard in the world, actually. They have a very close relationship with MasterCard. They had member services of mobile banking, ATMs worldwide. You could access ATMs worldwide. They didn't have them, so what they did is they rebated fees back to you. So even if you went into an ATM machine, used, they charge you a fee, you just say they give you money back. That's the way we could keep that relationship. Check deposits by mail was the key. Even with slow deposits, the deposit accounts kept growing. So we had a big issue there. We tried several things to try and speed this up. If you can think about this, if you got a check, you need to deposit at USAA, you'd put it in an envelope, send it to USAA, it would go through the mail, go through all the process. It could take a week to 2 weeks for your check to finally be in your account. So we did some things to try and speed it up. The first thing was, as soon as we deposited your money, you got a provisional credit on your deposit. That meant we fronted the money regardless of whether we got the money or not. And that was really important to our members. And that's something that USA continues to do. We had an arrangement with, I keep saying we, but just bear with me on this. Had an arrangement with UPS, Easy Deposit, and that's still in place. So it's UPS stores around the world, around the country. You could walk in and deposit the check there, and it would go into your USA account right then. But there was still limited coverage. We tried reciprocal agreements with banks. You can kind of imagine the reaction we got from banks. It wasn't good. We were doing anything we could to try and make this happen. We explored depositing at convenience stores. This was looking at 7-Eleven. We tried to do some reciprocal agreements with that. That didn't happen. It was very frustrating. And then all of a sudden, the big breakthrough happened. How many of you, if you're in the banking industry, you know what Check 21 is, right? Okay. For those who don't, first the long name was the Check Clearing for the 21st Century Act, otherwise known as Check 21. But the bottom line on it, what it really is it said that the feds got tired of flying checks around the country. You know, what would happen is your checks would go into your bank, they would get processed, they would go to the Fed, they would put them on jets, and they'd fly them all over the country to get to the next location, which is the originating bank, and then process it through there. It was a bunch of paper moving around the country. The feds knew it was expensive. They came up with a solution. They said, we don't need the check. We just need a picture of the check. We just need an image. And so banks started converting over to that. It's called check truncation. I can't even say it. Check truncation. And it involved using substitute checks. So this is when the innovation happened. At USAA, we asked the question, if it's just an image, why can't a member scan it on their flatbed scanner for presentment? Okay. So we put it into our applied research group. This was back in 2006. And the whole thing is if we just put the checks on the flatbed scanner, we scanned them in, we had a really sharp young man. He had just graduated from Baylor University, but he had a passion for doing technology and imaging. And we told Ray, go find the check in the image. And then when you find the check, orient it for us. And when you orient it for us, go look for the amount in the amount field and compare it to whatever we said. And if all that works, cool. That means we got a good check. And also, by the way, look on the back and see if there's an endorsement. That was actually the process we put Ray to. He excelled at it. He's one of the ones named on the patent for this. And then we had the next part was we had to get it into there. And so the whole thing was we had to figure out how to post the money to the account because we're doing this. Remember, we're trying to do this in real time kind of scenario. And then we had to get the file to the Fed. Well, here's where the problem we had at USAA. The first thing we had the execs they said, well, people that are going to fraud us. They're going to go through and they're going to deposit that check multiple times. It's going to be a problem. And we said, okay, well, we'll deal with that. They said we couldn't do the flatbed scanner. They'll never get it right. They'll never figure out how to put it on the scanner right or anything like that. They also won't figure out how to get it into the computers to get it to our place. We'll have a hard time posting because everything was supposed to go batch and we were trying to do this real time. And then finally, the Federal Reserve is not going to accept the check. So we started going back in our applied research group and we said, okay, let's talk about this. As far regarding the fraud, we get fraud all the time. we don't think it'll be much more. Let's go through this and see how this will go. We'll see how the members handle it. We have a very trustworthy group of members. Let's see how they do this. The second thing on the flatbed scanner, remember Ray? Ray was our saving grace there. He took care of all figuring out where the check was. As far as this, we put it into our internet banking product, which was a very robust product. I was responsible for getting the money into the accounts. I was responsible for the money movement architecture at USAA, and so I was responsible for whenever the thing would post, we would figure out that everything was right. It passed all our REST rules to post it into the account. That was my job. The final thing was the Federal Reserve. That was the biggest hurdle. Actually, we actually had the president of the bank said they'll never take it. You know, a average person scanning a check, sending it to the Federal Reserve, they'll never take it. So we said, well, let's give it a shot. Let's send some files to the Fed. We sent a file with a few checks to it. The Fed said, send us more. We said, okay, cool. So we said, we'll send you some more. We kept waiting for the Fed to say no, and they never did. So we said, okay, great, we've got a product. And so Deposit at Home went out. And then came along, this is a quote that I pulled off of a forum, and this was a key thing why we knew we had hit a home run with this product. And that Peace and Boat has always had to mail the deposits into USAA, and when they put this in place, it made it so incredibly simple to just scan my checks. And so people were scanning checks as much as they could. And then came along in 2007, and Apple introduced the smartphone, or the iPhone. Android shortly after. And the Windows. Richard is my Windows holdout there. I bet you can't wait for tomorrow, can you? That's right. And so the question was, once again, if it's an image, why can't members just take a picture of a check for presentment? So once again, the exec saying came through. We said, let's just go through the process again. The only thing we changed in the architecture was we replaced the scanner with a smartphone. And that was it. We went through the whole process. Of course, we had a little more fun with the smartphone because we could put a little window of a check there that you would get the check inside of, okay? So we kind of guided the members. So it helped Ray out. He didn't have to go look for these things. Now, Richard brought up an interesting point. I was talking to Richard last week, or a couple of weeks ago, about this thing, and he said, it's still not perfect. I think he said you put it on a dark marble counter, and it had a hard time finding that check on there. There's still some challenges with the technology, but I've had the similar thing. I put it on a marble top, and I've had to put a piece of white paper and let it kind of find the image. But eventually it finds the image along those lines. But that was the thing. The message I want to get across is the lessons from innovation. And this is important for any company. And this is something I look in when I go into a company. We had to rethink the business model, find the innovation. The CTO at USAA said, look, we only have one bank, so we got to create a virtual branch. And that virtual branch can either be the PC that the member has or their smartphone. And so that was the mentality we kept running with from that point forward. And that's why you'll see a lot of the innovations inside of the USAA's mobile platform. Sometimes it helps to try the obvious but untested. An image is still an image. The Feds wanted an image. That's all they wanted, a good, clear image. We gave them a good, clear image. People thought that the Feds would never take it. They did. You never know if it won't work until you try it. Bank leadership said this won't work until we finally sent it to the Feds and said, send us more. And that was the big key breakthrough for us. And then people are inclined to do the right thing to take advantage of innovation. This was a really important lesson. Some people will think of all the worst things in the world will happen in innovation. They think that people will try to mess it up or won't do it right or anything. Most people, when they're given an opportunity to deal with innovation, they'll take advantage of that and they'll help you out. They'll actually help you more to make it work than anything. So you can't let that be your roadblock. These were the lessons. And also, fear of the fraud, the incidents were few. We had a very I'll say this one thing. The USA membership is a special group of members, of customers. They have been the most trustworthy. The way the association was founded, it was founded by a bunch of officers in the military back in the 1920s. At that time, everybody said they're untrustworthy, we can't insure them or anything like that. When I came to work for them, they said they are the most trustworthy people to insure. In fact, the losses are very low compared to the rest of the industry. They're a great group of people. So now I want to move to something. As I talked about, this was in USA in the mobile space. It led me to a passion that I have, and that's in mobile and money movement, and especially in mobile payments and wallets. And that's something I've been following all along. So I know that this is a big hot topic, and I'll show you why it's a big hot topic. This is a chart I got from Market Realist today, and it shows the mobile payment market landscape that you'll be looking at. And basically, here's the inflection point I want you to look at. This right here is next year. We're not talking 2, 3, 4, 5 years in the future. This is next year. They're expecting that mobile payments will grow 207% next year. Now, it starts to go off on the decline, but the reason why that decline is because the infusion of technology, the infusion of being able to do it. Basically, you've got NFC technology out there, and we'll talk about several of those in a second. You've got industry conversion. You've got retailers who now, you can actually, those registers, those little readers that had the little symbol on the top, you can now use them for a change in some cases. And there's better security driving the opportunity. And after this is where the mobile wallet will kick in. And you're going to see how this progresses as we go forward. But this is why mobile payments is probably the hottest time in the industry, in the financial industry, is mobile payments. The problem is, let's go back to the early days of this, because I had to live through this, and it was not fun. The early days of NFC payments were like this. You had to go in and deal with the ecosystem. And first of all, you had to deal with this beast of a thing called a TSM. It was a trusted service manager. I had to learn that term at USAA. And you can read what it says there. It says a third party, et cetera, enables banks, businesses, mobile operators to communicate and seamlessly provide combined mobile device services. I want to scratch through the word seamlessly because it was anything but. It was probably trying to get everything to work. It was really coordinating this massive dance between the card providers, the carriers, the banks, the mobile devices, everything. This was a diagram I pulled from Visa that went through, and all of that was to get the card on that thing, the card information on that little piece right there that was inside the mobile phone, the secure element. But to do that, you had to go through a series of mobile provisioning services. You had to go through and eventually work with the network operators. Trust me, if you're ever one of the most difficult people to work with are the network operators. I think some of y'all have had some experience with that. Just to get this. But the reason why there was a lot to this is because you were getting ready to put your primary account number, and you'll hear me use it as the word PAN. That's what we use in the industry, is PAN, the primary account number. That's your 15 or 16-digit number. You had to put that inside a phone. And so everybody wanted to make sure no one would compromise it. And so, we're getting ready to give these phones out to people. We don't want anybody to hack them or anything like that. So they went overboard on the security model to protect that little 16-digit number. And it's important because people get hacked and things like that. But it was a very costly solution. When you looked at the roles, this was kind of the TSM stack, the NFC stack here to get things to work. It was a challenge. Well, to go the next step after this, this was what was stalling mobile payments in the United States for the longest time. We sat there and we went through this. We worked with Gemalto. Gemalto was they're located in Austin. They're a mobile payment provider. They've worked with ISIS and things. I always have fun when I talk about ISIS because they're now called SoftCard. They're actually purchased by Google, but we always call them the company formerly known as ISIS as well. It was probably the worst thing that ever could have happened when ISIS actually happened over in the Middle East. But we also work with a company called SK Telecom. The reason why people say, well, this happens over in Korea and in the Nordic countries, why can't it happen in the US? In South Korea, which has one of the largest mobile payment spaces, there's really only one telecom company out there, and it's SK Telecom. They kind of controlled the market, and they were able to accomplish some things. They were a TSM provider, and actually were marketing their TSMs inside the States. But still, you had a lot of people to put together to make this happen. I used to joke to say, whenever I would see one of these things come out, I would look for 4 things. I would look to see if the networks were involved. I'd look to see if the banks were involved. I would look to see if the carriers were involved, and finally I'd look to see if the retailers were involved. If any one of those 4 was missing, I'd call it a pilot. And if you watch the industry, that's what was happening for the longest time. ISIS, SoftCard, similar thing. They had a good idea. They could never get the retailers on board. Others could never get the banks on board. Others could never get the carriers on board. That was always the problem. You know, that's how we evaluated it at USAA. Google came along and said, we'll fix this. Instead of having to put the stuff on the secure element on the phone, we're going to move the secure element to the cloud. And that's what a host card emulation is, what HCE stands for. And they said, we'll move all that information to the cloud and we'll secure it there. Oops, here. See, I don't do very well at technology. There we go. It offered more flexibility and less complexity. One of the things I think you want to see here is whenever you were dealing with this whole thing of secure element there on the phone, you only were working with one application issuer. You were kind of bound to that particular connection along those lines. And it was a big problem. You couldn't have a big stack of things because it had to communicate out whenever it was working. When Google did this and moved it to the cloud, as you can see, it gave them flexibility. They leveraged the AID, the application ID, that whenever it came to the terminal, it would route to wherever it needed to go to fulfill the transaction. That was a key thing that Google did. And it supported tokens, but for a limited amount. They're still working on doing this out, but this is actually how Google's moving forward with Google Pay. So this is how you see Google Pay operating today. Now the one that everybody loves, Apple Pay. I want to kind of set the stage for Apple Pay because it's the biggest one out there right now. It's the one that really kind of moved the industry forward. Google Pay was neat, it was cool, but it never could really move the industry. There were a lot of reasons behind that. They still were playing on the old model. Apple turned things around. So to kind of set the stage, you guys can if you have iPhones and you follow this, you will follow this timeline. The first thing we saw was in iOS 6. That's when Passbook was introduced. That's whenever you saw Passbook inside your iPhone. So this is cool, what's it for? Well, it was a place to store cards and things like that. But the problem was there was no NFC. And if you're a payment nerd like me, you could see the start, but you kept waiting to look for that NFC radio inside there. Wasn't there. Okay, cool, we'll wait. iPhone 5S came around. That had a thing called Touch ID. You remember the little touch, you see the little touch thing that you have on your phone? And this thing called a secure enclave that most average human beings didn't care about, but for payment nerds like me, we thought that was a cool thing. It wasn't, if you notice, it's SE. Of course, Apple couldn't call it secure element. They called it secure enclave. But what they said to kind of mask it was that that's where we're going to store the fingerprint. We have to have a secure place to store the fingerprint. Well, for payment nerds like me, we said, yeah, right. We know what's going on here, but you're not there. We look for the NFC radio, no radio. Okay, so still no mobile payment. 6 is where it happened. 6 is where they said, okay, we're also going to use the secure enclave to store the payment in tokens that we're going to use. We're going to use Passbook to manage your cards. That's where you're going to find all your cards and everything. And we're going to protect it with Touch ID. So that makes it a simple process. So you walk up, instead of having to go in and enter in a code or something like that, you just put your thumbprint on the button and pay, and it automatically pays. Apple was big onto UX. They're really good in the UX. So this is how it works. So I was talking with Lee earlier. We were discussing how Apple Pay, and I wanted to walk through this because everybody says, well, how does it work with cards and things? Well, there's a key thing here that Apple did whenever they put Apple Pay out. They said, instead of dealing with a PAN, instead of putting a PAN on the phone, we're going to put a token. And that's actually something that's really big in the card industry today. In fact, at ABC Financial, that's one of the things. We don't store credit cards in our infrastructure. We store tokens. So if we're compromised on something, that basically they'll have a hard time getting back to the primary account numbers, these 16-digit numbers. It's tokenization. It's something that most merchants do today or try to do today. Apple wanted to do that also, and there's a little bit of a nuance to that. With regards to the tokens, they're issued by the networks. This is a key point. Apple, whenever you deal with tokens, most of it was your payment providers, your people like First Data or people like that would provide your tokens for you. You give them the account, you give them the primary account number that hands you back a token to store in your environment, and that's what you would use to transact business. If anyone ever stole your tokens, they wouldn't work because that was only working with your particular relationship with that payment provider, so that you kept it secure. But the problem you've got is you're only working with a payment provider, so you're kind of locked in. Apple went one step further. There's one entity in the card ecosystem that's common across all cards, And those are the card networks. That's MasterCard, Visa, Discover, and American Express. If you look in the EMVCo spec, it talked about this, and Visa came out with their own token solution. MasterCard did too, American Express, and Discover, I think, has got their own. But if you do that, your token works across any bank that issues MasterCard. Your token works across any bank that issues Visa. Same thing with Amex, and same thing with Discover. That's where Apple solved the problem there. But that wasn't enough. So what happened is your card went in, Visa would hand back a token to Apple, which would store it on the iPhone. And then whenever the transaction would go through, they would turn that token into a Visa card and send it on to the issuing bank. So that's how they solved that problem. They also fixed this out so that you couldn't just replay these tokens. They followed the EMV spec. And what they did is they added a cryptogram along with that. So it's a one-time cryptogram. So the only thing is every time that goes through the network, it's only good for that one time, and that's it. So even though you've got the token there, even if you were to compromise the token, it still wouldn't work. You've got to have the cryptogram generated by the hardware inside of the iPhone. It's device specific, so therefore you can't take that token somewhere else and replay it. So, and it's actually, if you look at it, it's just like EMV works. That's exactly what it is. Apple said, we're not going to reinvent the wheel, we're going to use the EMV process. So the payment network converts the token to a PAN, that's whenever it gets to Visa, and then it follows the EMV rails at that point. They also, Apple did something else. They said, not only are we going to allow you to tap and pay, but we're going to put a component inside of the iOS and then development, so you can actually put these buttons inside of your apps. And it will go and get the information you need out of the secure enclave and pass that on up the lines. So that way, your applications could leverage that same infrastructure to pay. That's how Apple did it. Now here's the cool part. When Apple did this, because of this security, and I call it awesome card security, it's actually pretty decent. Apple struck a deal with the card networks that kind of gives them some advantage here. The first thing it is these transactions go through as card-present transactions. That gets them the lowest interchange rate that's out there. You know, because the way this works is, as card present says, you have this physically in your hand, and when I swipe it, it means that someone else couldn't have had that. Of course, they could have stole your card, of course, but the card present transaction is the lowest interchange in the industry. Apple said, even though we don't have the card, because we had the card at one point, because it was authenticated, because it went through all this, and because we're secure, the card network said, okay, we'll let you go with card present. That was the first thing. The second thing is Apple said, well, we need a little bit of this. So Apple actually gets 15 basis points on every transaction that goes through. How does that tally up? That means that for every $1 billion in payments, Apple's getting $1.5 million for their infrastructure, for all the work that they did. And it's just going to keep going on like that. They also said that issuing banks had to enable 95% of their cards for Apple Pay. So that meant that they got pervasiveness in the market right there. And then here's the wild thing. Apple said we'll also share that payment information back with issuing banks, including location. So there's that little interesting thing about that it's part of the agreement, and Apple shares this back to the banks. Now, what the banks are going to be doing with this is another thing, but that is a part of the agreement the way this moves forward. So now I'm going to kind of go through, that's the two big players. That's Google Pay and that's Apple Pay. There's this other one that just came along, and it's called Samsung Pay. I don't know, how many of y'all heard of Samsung Pay? Very few, okay. This is, you're going to have some fun the rest of this presentation, because they're going to take you down a mobile payment network you may have never even known about. Samsung Pay was announced earlier this year. It's going to launch later this year. It hasn't launched yet. And it's going to use tokenization also, but Samsung Pay is going to do something that is interesting. They're using this thing called magnetic secure transmission. Now, I tried to find a picture somewhere on the internet that would show how this works, and it's really hard. But what this is if you look at a lot of small merchants, they don't have these NFC readers in their stores or anything. They've got magstripe readers, right? Samsung purchased a company called LoopPay. And what LoopPay came up with is a technology that allows the phone that if you hold it next to a magnetic stripe reader, it actually communicates through the reader, through that. Yeah, Lee?
So, quick question. all of the readers support with the new chip card standard.
Right.
Do all of those support NFC?
As far as like all the new chip cards, you're talking about the EMV cards?
The reader,
Oh, these readers here. That's
I'm saying that the chip card reader terminal,
oh,
that are having-
would work with Samsung Pay?
Yeah, do they work with, yeah, magnetic or NFC?
They
Is Samsung gonna miss out on something because the Fed has mandated?
as far they still support NFC. They still go along those lines, so they'll still be in that game along those lines. They just, for some reason, they felt that this would give them an extra advantage by being able to work with small ones and not. I was reading this morning because, yeah, yeah.
The Fed has mandated
Oh,
that all of the terminals be replaced to support the chip card standard. Do those terminals support NFC?
yes. No, well, I'm not sure on that, Lee. I'm not sure. That's a good question. I need to go check on that. I can get back on that. Get back with you on that. Most.
And if they supported NFC, then Samsung's late in the game.
They are late.
Small merchants are going to be required to change that anyway.
Yeah, Samsung still supports NFC. This will still go with NFC. They're trying to get an extra piece of the market, but you're right. In other words, it may have been a play that's not going to give them any lift or anything like that. They're thinking it's giving them lift, but you're right. If everybody converts to NFC, why does this even matter in the case? So, and and they are supporting NFC along these lines. This is something that they're trying to kind of get a little advantage when they went with this. Of course, it's yet to be proven how this is going to go. One of the interesting things you were talking about, the mandate and everything, I was looking as far as the October 25th or October 2015 deadline. The way that I read today is there's still a lot of small merchants that are not going to be ready. As some of you may know, ABC has an office in Conway, and the API team works there. There's a really cool little coffee shop called Blue Cell, a little small plug. They have a Square terminal there. One of the things that Square has come out with to help their merchants move forward is they've come out with a little Wi-Fi device that connects to that terminal and will allow you to actually do EMV and Apple Pay as well. I encourage them that when it comes out to put it on there. It's a free one from Square, and it will help them get to NFC compliance. Yes, sir. Okay. That's one of the things that small merchants are really going to have a hard time getting to this compliance. The compliance aspect is they're not finding anybody. All they're saying is if you send a fraudulent card transaction through, we're not covering it. If you get a data breach as a result of this, you're going to have to pay for all the credit monitoring reports and things like that. It's a requirement to anybody who is not in compliance by October 2015 to encourage them to move forward, but there's no fines or anything like that issued if you're not in compliance at that point. PayPal is the one that's an interesting one. PayPal's had a wallet around for a while, but PayPal tried for a while. They were trying to provide payments. Home Depot was an example. I'm trying to remember some others that were, where you could walk in and they would try to use your GPS location and pair you with a register, or use Wi-Fi in the store and pair you with a register. It was never successful. They've abandoned that. They have since looked at doing beacon technology and leveraging a beacon. In fact, they're actually promoting you'll be able to get a beacon dongle that you can stick into your USB port for your devices to do the payments. This is still to be released. It hasn't been released yet. So everybody's waiting to see if PayPal continues to try this approach. That's one. Currency. How many of you are familiar with Currency or have heard of Currency? Who is Currency with? Lots of merchants. What's the biggest one? Walmart's. Best Buy is backing it also, but Walmart's the big one. And this is where they're going back, trying to figure out how to get it. The reason why some merchants didn't get onto the Apple Pay thing, they were still looking for an opportunity to get around interchange. Because the thing with Apple Pay is it's all credit card based, credit and debit card. So they're trying to get away from the interchange. So they came up with a solution, and actually this is MCX. If you go back and look, this is MCX behind the scenes here. And it uses bank accounts instead of credit cards. The payments are processed just through the ACH network. They assume some risk in this because, by the way, it's processed just much like Target Red Card. I use Target Red Card all the time. I get 5% off my purchases when I go in, and it comes out of my bank account. Now, the challenge is if I ever go through and swipe and there's no money in my account, Target's out money. They have to come after me in that scenario. Of course, they're probably going to shut off from a red card, but that's, there's a risk model that gets played into this. To our point, lots of retailers are behind this alliance. Walmart's the biggest one playing in this. But the problem is we're still waiting to see this come and hit the market. This was announced back at around the time Apple Pay was coming out. November was about the time they announced currency. Everybody kept waiting to see this app hit this, I've got the currency app on my phone. I'm still waiting for it to be turned on. It has yet to be turned on. They're saying that sometime this year we should start to see this happen. So we'll wait and see. Let's see where this goes. Oh yeah, this is my favorite one. I told Luke this morning, this afternoon, I said I added an extra slide because I let them look at these slides. This is one. This actually came out. I saw some information on this today. So Bitcoin, it's out there. So, well, what about Bitcoin? Why can't we use Bitcoin to make payments and things? Well, guess what? You may be able to. A company called OneBit is going to be offering Bitcoin mobile payments. And before you think, okay, this has got to be way off the rails and way off the reservation, it's actually not. This was developed at a MasterCard hackathon. They put this together at that hackathon, and basically it leverages the MasterCard's PayPass technology. It's not in partnership with MasterCard, but they kind of like it. There's no fees for the transactions, so there's no interchange here, okay? It's settled at market rates. So the problem you've got is Bitcoin, fluctuates. It's not like standard currency, so therefore it's going to be settled at the market rate, whatever Bitcoin's running. And it's only going to be available in Europe. They'll wait and see how this goes out, and then they may bring it over to the States. We'll see where this goes. I want to kind of keep moving here. This is the one everybody should be familiar with. Good old Starbucks. How many of you have used your Starbucks mobile wallet? Yes. Okay. Yeah. Okay. Starbucks, I love this one. This one leverages a preload. You preload this card. It's only your Starbucks card that's used on this. It's a closed loop system, and that's an important point right here. Because first of all, why Starbucks offers this, it helps them reduce their interchange fees. A $25 reload costs them 50 cents a transaction. Now, of course, they pay the interchange on it, but it's 15 cents a transaction is what they pay on this. Compare that to if you had a $2.50 coffee, I think that's how mine usually runs, $2.33 or something. 10 cents a transaction, but there's 10 transactions in a $25 reload. It costs Starbucks a buck compared to 15 cents. That's why they like this model, and they promote it. It also has the loyalty is it's only good at Starbucks, okay? You can only use this at Starbucks, which is going to launch me into the latter part of my presentation. This is kind of, I've given you the landscape of mobile payments, but there's more to this story. And the story goes into loyalty rewards. Starbucks probably has one of the best rewards programs in the nation, okay? So how many of you gotten free coffee with your Starbucks card? Okay, lots. Aside from cool animation, and I always love to turn the little thing around and watch the stars tumble around. Whoever came up with that, cool idea. It's also easy to understand. You know when you're going to get your next cup of coffee because Starbucks tells you you need 3 more stars or 2 more stars. They award it per transaction. Somebody asked the question, was it per things I have for, if I have 5 coffees, do I get 5 stars? No, it's 1 for every time, but it could be any. I mean, I could buy a little small coffee or a big, huge one. I still get a star. And they will occasionally drop bonus stars on me. All of a sudden, I'll get a little message from Starbucks saying, you have an extra star. Cool. That's great. And they'll tell me why, or they'll give me some incentive. They're getting ready to launch a partnership with New York Times, Lyft, and Spotify. This is actually, Spotify's the first one. It'll be coming out later this year. And so if you do transactions in Spotify, you'll get Starbucks stars. If you do rides with Lyft, you'll get Starbucks stars. If you do buy the New York Times or things like that, you're going to get Starbucks stars. Starbucks looked at their market demographic and they said, these are some of the other people we can partner with and get some opportunity there. And so they'll be moving forward on this. This is where you're starting to see the loyalty rewards expand, and you'll see more people leveraging this. This is one of my favorites. So a lot of people, I'm from South Texas, and by the way, everybody says, well, you should be used to this heat. you're never used to this heat. I don't care if you are from South Texas, you never get used to this heat. But I was in South Texas and we had HEB. We didn't have Kroger's. So when I moved here, I thought, oh my gosh, I don't have my HEB. I found Kroger, and I found some really cool stuff with Kroger. I work at the Conway office, so I drive a little bit. So this whole thing of 2 times fuel points in the summer is the best thing in the world to me. And of course, if you, how many of y'all have Kroger cards? Everybody has Kroger. How many of you use your fuel points? Yes. That's all good, and I love that and everything. But this surprise hit me one day when I went to the store with my mom. I like to help them out, so I'll buy the groceries, and I get the points off the purchase. But I had stopped by the Sherwood. I had come back from the Sherwood office, and I stopped by the Kroger store, the Kroger gas station there in North Little Rock, and I thought there was something squirrely happening, but I thought, what the heck? I just need to get the gas, and it's pretty cheap gas. Bought it, went along. July 3rd, right before 4th of July, I was home on Friday, went to the grocery store. We got the receipt, and I discovered this. They said, you may recently experience some slowness at our pump, so we're going to give you 100 bonus points. They just showed up in my account. That was cool. So what happened to me? Kroger's cost, it was $1.80 because I have an 18-gallon tank, so you get 10 cents for every 100 points. It cost them $1.80. What was the impact? Priceless to me. I'm now a loyal Kroger customer because they were thinking ahead for me. They were leveraging loyalty and rewards and rewarding me through that process. This is one of the key things. This is where this starts to move into the mobile wallet. So we talked about loyalty rewards. With Kroger, you can take, and I don't know if you've used the digital coupons, you can load them up on your Kroger card. When you go and you scan your Kroger card, it takes all those coupons and applies them. That's where it starts to bring things together. They haven't got payments there yet, but I'm seeing that coming. One of the things that happened is the mobile wallet. And I love this slide. They call it the Mobile Wallet Olympics. You see a large thing there. Can you find a wallet you've used in any of your time? I'm sure someone's found I've got about 4 or 5 of these on my phone right now. Some of these I've never even heard of. This is the mobile wallet space. Everybody's moving towards the mobile wallet. There's a reason for this, because having a payment on your phone is cool. Having loyalty with your card is cool. Having rewards is cool. Starbucks rewards is cool. But I have to kind of do these gymnastics when I want to make things happen. I have to pull things together myself. The mobile wallet, the intention of the mobile wallet is to allow for integration. It's really just a container. It's a container for your payment cards, your loyalty cards. It's a container for your boarding passes. It's a container for your insurance cards. It will be. It's a container for offers and coupons. It's designed to integrate at the point of sale or at the transaction level. And it's also designed to provide location awareness. So whenever you come, if you've got Passbook on your phone, your iPhone, and you've got the Walgreens card, have you ever seen it light up when you drive? I drive down Oak Street in Conway. There's a Walgreens right there at Oak Street in Harkrider. Every time I pull up that stoplight, my phone will buzz, or I'll look down at it, and there's the Walmart app that all of a sudden just popped up and said, oh, you're by a Walgreens. I could swipe that, and my Walgreens card will be ready. The real intention is they want to be able to offer and push offers to you as well. So I don't know if you're familiar with Macy's Beacon program. Macy's set up last Christmas, they set the Beacon program up, so they put these beacons in their stores. And then people with the Macy's app on their iPhones, when they would walk into a Macy's store, it would give them what the offers were in that Macy's store. So they would know, okay, you've got this particular merchandise on sale, or this is on sale, or something like that. It wakes up and it gives consumers awareness. Now, someone told me, they said, well, that's a little intrusive. I don't know if I want it all the time. When actually I've watched people use this, they like it. The reason why they like it is because it's not that super intrusive. It pops up, it looks at you, you put it back on your phone if you don't care about it. But if you do care, you can look at it and see if you may want to take advantage of that. That's advertising that stores can't get any other way. So really, in a sense, let's see if we can get this last one here. This is my last slide here. What the mobile wallet is the future of where everything will be. Your coupons are going to be stored on your wallet. So anything, if you're a coupon clipper like my mom is, I've moved her from going through the newspaper to going through the Kroger ad on the internet. She now goes through, and every week she'll go through the Kroger ad and she'll find coupon savings inside of there, which that's a transition. Proximity notifications, I just talked about this, but this will continue to move forward. It doesn't have to be stores. It can be, we have ABC Financial, we work with gyms. It could be gyms to offer a class. Say, for example, they have a class starting in 10 minutes. When you walk in, the beacon can wake up the app and let the member know that there's a class starting in 10 minutes if you want to take advantage of it. And oh, by the way, if you want to purchase it, swipe it, hit a button, and it's bought. That's an innovation to think about. At the checkout, it's designed to go and pull everything together. So when you walk up, it's a one-tap scenario. At that point, the mobile wallet is going to take a look at your card. It's going to look at your offers and rewards. Do you have any coupons? Let's apply the coupons. Did you have any rewards points that I can apply? Let's apply those. That's your new amount. Now let's use your payment card that you selected in there to pay for the thing. And then when we're finished, we're going to put some more points back on your card. All that happened with just put my thumb on the button, tap the reader, and it's done. Now let me ask you, if you had that scenario, would you use mobile wallets more? That's where we see the future going. Okay, that's kind of it. Hopefully I took you through a lot through this day. That slide, if you want to, you can copy it. I'm sorry, Microsoft doesn't give you good known name. I wish I could give you a better. So if you can remember that right there. But I think Lee will have it or someone else will have it here if you want to. The entire slide deck's out there for y'all to take advantage of and look at. Any questions? Any thoughts? Any ideas? Yeah, Richard?
Hello. Yeah. So is there anything else going on internationally that is going to come to the U.S.?
That's going to come to the U.S. Aside from the Bitcoin, I haven't seen anything else internationally. I mean, they're doing a lot of stuff internationally. I've seen, I always blank on the name of who it is, but they're in Africa. They're very heavy into mobile payments over there in Africa. I haven't seen that technology moving into the U.S. This has kind of been the common space here. But is there something you've seen or something along those lines?
Yeah, actually, I think it was pretty much that, right?
Yeah.
So they're effectively using minutes as a currency, right?
That's exactly right. It's huge in Africa. And I don't know if y'all are familiar with what this is. In Africa, they make their payments using their minutes from their phone. And they basically will text the payment across and people will take it, and then it clears through the mobile provider. That's one of the challenges. We were looking at that here in the United States. One of the challenges you have is, of course, our regulatory environment is really conducive to allowing those kinds of things. But in other countries, you see those kind of things happening. So, yes, sir.
Yes, one other one as well. So this wallet and the Olympics, as you call them, it's a pain in the neck, right?
Yes.
I've got all of these things, and all of these. A wallet that is, I seen my wife's wallet yesterday, and it has got 1,000 cards in it of various different things. But are people going to adopt that, or are you going to have 3 or 4 wallets that cover your space?
That is really where the question's coming down to. Which wallet's going to win? I mean, if I go back to the slide here, that was kind of the question they put on the bottom of it is, who will end up on the medal stand? Apple, with the latest innovation, latest thing that we're going to see with the next iPhone, I think it's 6. I think the rumors are 6S. I don't know what they're going to call it. But this next one, they're going to start doing more of the integration you were seeing. Retailers are trying it. They're trying to get out there with their own mobile wallets and play through those games. I've seen some banks trying this. I've seen some wallet providers themselves, Softcard is trying their own. As far as which one will rise to the top and win, I really think it's going to be either Google Wallet, or it's going to be Apple's. That's my own personal, by the way. There's nothing behind this or anything. Luke?
Yeah, I had a quick question.
Whoa.
Relating to mobile wallets and also the EMV standard, do you see the EMV standard getting trumped by mobile wallets as all the retailers start to adopt mobile payments and just riding on the EMV rails? Or do you really see EMV as taking off as the new secure way that the U.S. is going to handle transactions?
I think it's an interesting way to answer that. If you go back to the way Apple implemented their mobile payment solution, they actually implemented it with an EMV approach. The difference being is instead of the PAN being sent, they're sending the token through. But after that, it looks just like an EMV payment all the way through, which that's why I believe that's where the industry wants to go, is to say, let's just keep the rails in place like they are. We just need a different way of putting the payment onto the rails. So I think the EMV will continue to move forward. The difference will be how does that payment get onto the rails to start with? And that's where Apple used with their approach.
Randy Alvin Henderson. You talked about the mobile wallet receiving, being able to do coupons and doing different type of discounts, showing that.
Right.
Is it possible for you to provide any type of cash incentive to the consumer from the merchant?
From the merchant, actually, so Target's a great example of that. Target, one of the things you'll see is first of all, with the coupons and things, that's one aspect, being able to have them use digital coupons and load them on. But as far as payments concerned, Target gives you 5% off if you use their Red Card. I would see Target putting their Red Card in the wallet, and then at that point there, whenever I tap and pay, I'm going to automatically get 5% off that. The reason why they do that is because you're running down ACH rails. I don't know if that's kind of what you were looking at, or.
What about my regular MasterCard or Visa card actually transferring it onto my account?
Those, when you say transfer it on your account, help me out a little bit. What do you mean? Are you as far as rewards programs and things?
So far as the rewards program, if
Those will stay in place. Those rewards programs most likely will stay in place. Lee and I had a little bit of a conversation about this earlier. You know, how will that trump it? As I went and did some research, all the card rewards programs will stay in place if you use their card transactions. The reason for that, if you look at the interchange, that's paying for the rewards. Merchants are paying for those rewards. Now, to your point, will merchants try to find ways to get away from that? That's where Target, that's where Currency, people like that are trying to steer away from those cards, use their own private label cards. So Kroger card is a great example of a private label credit card where they don't provide you any cash back or anything like that, or any, Kroger, I'm trying to remember, they give you extra points if you use your Kroger or Visa card, right? Yeah, so that's their way of incentivizing you to use their card and run down a private label card. So, okay. Yes.
My name's Calvin Hill. My question is, right now with insurance, you mentioned a little briefly about insurance cards.
Right.
You have to go to your doctor, let's say it's the first time. It doesn't matter what doctor you go to. If it's the first time, sometimes it's every 6 months. You got to hand over your card. They go make a copy of it. And then sometime later, they'll enter it into the computer system. What time does approach into the wallet?
How will you be able to do that then at that point?
Or will doctors have their own way? Will they not want to go that direction?
I'm not sure exactly, and that's an interesting thing. I know one of the things that's happening right now in the medical space, I do some side work for a medical provider in San Antonio, and one of the things is EHR, the whole electronic health records and things like that is moving more and more to more electronic transactions. Now, to the question of, do you still have to scan your insurance card? I would suspect that that's going to have to move away because all that really is proof of insurance. Okay, let me look at it this way. So I'm not saying that I'm answering your question directly on this, but I know that at USAA, when we were able to put the insurance card on the mobile phone and you could show that to a state trooper, and they accept it, why wouldn't a medical provider accept it if they saw it there? I do think that will move closer to that direction as more and more people accept the fact that that digital image is truly your insurance card or something like that. Okay. Any other questions? Yeah, Richard?
I can keep going for a while. Yeah. So I mean, when you look at all of this, you're talking about the interchange fees. Is someone going to come up with an app, like a startup around here maybe, that you know, what is the best, most economical way for me as a consumer to pay for something?
That actually, so the startup that I was working with in San Antonio before, what's that?
All my ideas are taken now.
Oh, well, we never were able to finish it. And this is one of the reasons. So I'm going to give a little plug for the Venture Center here on this. One of the things that startups have a challenge is figuring out their business models and being able to figure out their funding and figure out their approach to take. This startup ran into a problem early on. I was working with them. They realized that they were going to burn through their funding. And so we had to stop the project we were looking for. That's why I encouraged them to go to places like the Venture Center and learn how to do good work and learn how to run through business plans and things like that. Lee, there's your pitch right there. I always encourage, anytime I hear startup, I said, you need to go talk to incubators and talk to their programs. But we were working on something along those lines. We were looking at what we would call payment optimization. So whenever you went in and you actually paid, we were looking at building a mobile wallet solution for vending machines. And we were looking at ways to optimize the payment and go through and find the least cost payment instrument to run through there. Now, the challenge you've got is the consumer may go for a different one, to the point about rewards and things like that. Those are typically going to have the highest interchange rates, but consumers get benefit out of them. So really, in a sense, if you think of really what happens is payments really move to the cloud, and in the cloud is where you start that optimization process. You know, all the wallet is a container. It has a container of all the cards you have. But in reality, that can get represented in the cloud, and then you can start looking for optimization and running through the rails. One of the things we were looking at USAA was looking at ways to optimize our own payments there. The ACH was nice, it was good, but there was also EPN. And we were trying to send payments down EPN, Electronic Payments Network, which is a consortium of Wells Fargo, I'm trying to remember all the other banks were in that one. But we're trying to look at ways to send payments down that to reduce our cost as well. Payment optimization will happen in the cloud. Does that kind of get, okay.
So similar line of question, where's the not obvious innovation?
What's here?
Opportunity for the banks.
That's an interesting question. Lee, do you know? I really don't. I'm trying to think of myself. Where do you think would be an opportunity along?
No idea if they're all scared to death now with Google.
Yes.
They're going to compete no matter what because they're scared to death.
That,
I don't think a lot of people are talking about what the opportunities to deliver innovation to the banks.
I agree. I do agree with you on that. I think you're right about them being scared of Apple and Google because they think because they've come up with this, because they control the operating system, because they control how the payments are delivered, that they will also control the optimization and things like that. And the data. Just like you saw, I saw some people kind of shirk whenever they saw the Apple agreements, they're sharing the data. There's so much that can be gained with a mobile wallet, because think about this. It knows where you are, it knows what you buy, it knows how you pay. That's a lot if you think about it from a retailer's perspective or from a business perspective. And it all goes through the wallet.
And one update to Apple's terms of service is all.
It's what?
One update to Apple's terms of service, and the banks will go.
There's an interesting elephant dance going on between that. And that's one of the things is the banks still have the cards. They still issue the cards. The reason why Apple was able to get where they were is because they negotiated with the networks, not the banks. And that was how they controlled. Yes.
This type of payment, the percentage of payments that are going through this are minuscule, right? From Apple Pay, for example, compared to the universal.
Yes, they are. How's this moving forward? If I go back to this, so I can get back to that slide, it's back there a little ways. I was looking at that same thing, Richard. I was trying to get a good feel. I have seen a number as high as 20, it was in the trillion by 2020 was where the number was that I saw come on that. I'm trying to get back here. I want to see where the numbers were that I saw here, because you're right, it is minuscule. Here it is coming up.
Yeah, so vested interest. The last company I worked for, well, second last company now. The last company I worked for was ABC. But the second last company was we actually printed cash. So it was Delarue. We actually manufactured cash from raw ingredients printed it, designed it, and shipped it to various places and around the world. But it's interesting, these mobile payments, just another view, because the business model for De La Rue and commercial printers of currency, cash is going up. We're still selling 3 to 4% an increase per year of physical cash in the world is still being used.
Yes.
And so again, the pie is getting bigger for everybody.
You know, the interesting one, that's a good point. Cash is getting bigger. Electronic transactions are getting bigger. The one that's shrinking is checks. And checks continue to drop all the time. In fact, that's why the Fed started, when Fed went to substitute checks, they started shutting down centers. When a lot of people there, more and more were losing checks in the industry and things. They're still around. I mean, I have people who still write me checks, but that number is dropping more and more, especially when P2P comes along, because P2P is when I don't have to worry about this anymore along those lines.
So, speaking of P2P, what's the fundamental problem with that? Why are companies like Koala not taking over?
Part of that is the banks. I mean, Dwolla actually partnered with BBVA. And one of the things they did with BBVA is P2P is, I mean, PayPal is still big. It's still going strong. But you're right, they're not taking over. We don't see that as the alternative rails. Dwolla tried to go along this. The startup I had was working, we had some conversations with Dwolla, looking at their model. There's another one called Knox Payments that's out there as well. The problem you have are the banks. The banks still kind of control how things move, and they can shut the levers off if they want to. They typically don't. They try to play nicely. They try to be good stewards. But the banks, if they see any opportunity for fraud or something like that, they'll shut the levers off. The BBVA one, the Dwolla BBVA one, is an interesting one. I don't know if y'all are familiar with what this thing was. Dwolla is a payment provider. They basically will move money. They'll not only do P2P, but they'll also do business payments. But what they've done is they struck a deal with with BBVA, and they have access into their real-time posting API. So if Lee and I are both Dwolla customers and we're both BBVA customers, if I transfer money to him, it'd be in his account right now. Or if Lee is not, but I'm a BBVA customer, when it gets transferred, I get a provisional credit on the money and it comes in right now. Now there's a risk model that runs along that process to take a look and make sure that it's not outside the bounds and things. But that's the thing. Real time. You're getting me started on, I'll avoid. I'll just say this. Yeah, I was going to say the next topic, because there's another passion I have, and that's called faster payments. Richard, where are you from? UK or where? No. UK, okay. So you're familiar with faster payments. Yeah. Just say this. We really are missing out on something big here in the United States. The UK, payments clear in 10 seconds or less. All payments do. That was an initiative that the UK put in called faster payments. But with faster payments, if the Fed is trying to get as close to real time as they can, they're starting from multiple day clearings. They're clearing funds multiple days, multiple times during the day. So you should see your money moving into your accounts faster, but you're never going to see real time until the Fed fixes the system. Yes, sir.
I'm not very process here. Why it takes into the payment process?
Yeah, the Federal Reserve. Why are they slow to move through this process?
Why are they involved?
Why are they involved? At the end of the day, right now, your money still has to clear through the Federal Reserve, the way the central bank, the way the U.S. banking system operates. Now, there are alternatives, and that is EPN. I could get started on I gotta be careful. There's I could talk a whole section on that, on the whole payments networks, but.
So you need to say, make it into random play, that
has to be cleared through the Federal Reserve, except in some cases, and that's an EPN. EPN is an alternative that Wells and some others did to avoid the Fed, to get their own, to cut the costs down and also try and reduce the time. EPN is actually trying real time. Yes, Jay?
How did the fraud management efforts differ for the mobile checking versus the physical checking?
Mobile checking, we say mobile checking, what do you mean? I mean deposit?
Yeah, mobile deposit.
So I actually had a part to play in that one. In the case of mobile payments, one of the things we did at USAA, so this is a little bit of going back to that. One of the things we did at USAA is we built a thing called the Risk Manager, the Risk Analyzer. Actually, it was called TRA, Transaction Risk Analyzer. And to your point, we put that on all financial transactions, not just mobile transactions, but all financial transactions. What it would do, and I think actually, Lee, we were talking about this, Centennial puts a limit on what you can deposit and things. USAA, we wanted to be a little more flexible there. So what we did is when your transaction came in, we did three things. We looked at, first of all, we played virtual banker, virtual branch. So if you go into a branch, your branch manager knows you, right? Knows who you are, knows what kind of transaction you are, physically knows who you are and what your assets are. So we played virtual branch. And what we said was, we know who you are, we know all your assets, we know what your insurance products were, we know what your banking products, your investment products, things like that. We have a net worth on you. We also know who you are physically secure. We trace the transaction. When was the last transaction that came in? Was this a speed, was this a speed fraud, where the last transaction came in from California, the next one came in from Russia? Those kind of things. We looked at that. And then finally, we looked at your transaction history. So we would look and say, what do you typically do? What is your, what type of transactions do you do? Do you normally do a transaction that's $1,000 on the 15th of the month or something like that? We did all that and scored it. And then from there, we put a risk score. And then to your point, we would do one of three things. We would either reject the transaction, very rare. We would accept it fully like it is and process it through and post real time, or we would slow the money down. We would give you $500 right now, and we would delay the rest of it for 3 days. Follow the clearing process. We were able to alter the transaction and do that at that point. We did that in microseconds. Now, whoops here. We did that in microseconds. One of the coolest projects I ever got to work for. That's one of the patents I've been an inventor on, and I'm proud of that one. There's some others I'm on, but that's the one that I'm the most proud of. But does that answer your question along? And it was a cool thing. That's what you see PayPal do. PayPal does the same thing. Others do the same thing. Anybody who's really doing true money movement, you've got a risk engine running on top of there that looks at the transactions. If you really want to be proactive with your customers.
But more fraud or less fraud?
Less fraud. We saw less fraud when we ran the risk analyzer, because when we started to see a transaction go off the rails, what we did is, first of all, we slowed it down. Okay, so we may not give you all the funds. We also alerted someone to say, if it was a high value customer, call the customer. If it's not a high value, you could call in and we would come through and we would show the transaction, show the score, and a rep could look at that and say, we still let the reps have the discretion to go in and override the alteration to the transaction if they needed to. But we saw less fraud when we put the risk engine in and followed through. Anything else? This has been fun. And yeah, I could talk about payments all day long, but anyway, thanks. Sure.
Yeah, thank you. That was great. Seriously. Yeah. I'm not a code person, so if I enjoyed it, it was really good. So there is totally plenty for a part. Would you guys be into a part 2? Yes? Okay. So I need you guys, in addition to coming to part 2, I need you guys to get in touch with us and let us know, either via email, because it might not be in your head right now, or right now, you can catch me in just a second, and let us know if there are specific topics that you think would be really cool to hear somebody talk about. That could be anything that has to do with this world of coding, not necessarily in the fintech space, but whatever it might be. So just let us know if there's something awesome, and we'll try and get somebody in here to talk about it. Okay, so every 4th Tuesday, and we hope to see you again next month.